Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and today, guys, we finally had the FOMC announcement, and a few things happened. We anticipated a 25 basis point cut. That's what we got. And then we also anticipated Jerome Powell to say we're going to wait and see for data-dependent future cuts in the markets. Right now, the CME Fed Watch tool is predicting only one cut for next year. We'll see how that rolls out. But the big shocker, guys, was that the Fed announced they are going to be buying securities to the tune of $40 billion starting this Friday. What that does is basically just creates money out of thin air, and it helps reduce and keep short-term rates lower. And think about it this way too, folks. When the Fed steps in and starts buying this debt, otherwise it would have been bought by private individuals or institutions, which could push up rates. But now we have forced buying, which should put a cap on rates, at least for the near term. We'll see when this QE, quantitative easing, how long it lasts. But that is a shocker. Investors like it and have since surged up on the market. So let's check out the market summary board to see where everything has ended through the day. All right, guys, we got Dow Jones up 1.16%, Nasdaq up 0.33%, S&P 500 up 0.64%, U.S. oil up nearly 1%, gold up 0.4%, and Bitcoin struggling a little bit, basically flat on the day, down 0.21%. All right, guys, so let's jump into the S&P 500 heat map, and you can see here we do have a lot of green on the screen. There were some laggards. Meta, namely, down about 1%. Netflix under some decent pressure today, down over 4%. Microsoft down 2.74%. NVIDIA down just over 0.5%. APP also down about 3%. Notice that that chart is approaching double top. We covered that not too long ago. We should see stiff resistance there near double top in the near future. Aside from that, guys, look at the sea of green that we see here on the charts. A lot of stocks, all positive for the day. Again, quantitative easing also implies cheaper money. Money out of free air, money out of thin air, guys. Who doesn't like that? But there will be a reckoning. Eventually, money doesn't always come for free. Someone's got to pay for it. But right now, the markets are rejoicing. So let's jump into the S&P 500. And you can see here, we've been talking about the top end of this parallel channel. Today's announcement surged price through this parallel channel. Now, this is just one day up here closing. Should we push up again tomorrow? This double top right at 689.70 will be the resistance. Now, guys, notice this, what happened today on the 10-minute chart. All right, so from yesterday, we had an head and shoulders pattern that developed on the 10-minute chart. Right here is a left shoulder, head, and a right shoulder. It was designated by this neckline that you see drawn right here across the screen. But look what happened today, and this is the amazing thing, guys. We cover this in this show so often. When price breaks a significant trend line, what does it like to do, folks? It likes to complete the measured move, which it did down here around 682, but then it likes to go back up and test the trend line. And you can see it did that once, twice, and then here comes the Fed announcement. Boom, at 2 o'clock, surged right through it. But look how many times price came back down, pierced this trend line before catapulting up on the charts, now closing the day with a little bit of profit taking. Still incredible stuff and price action, all with TA outlining where price action can go in the near term. That's what we do here at the show, try to give you insight as to what the next move is going to be. Into the Qs we go here. And yesterday we were talking about how the Qs were starting to put a little bit of a rounded top. And then today we started surging back up. Now, one thing to note, we didn't get outside of this range. Notice these high wicks. We didn't close above that. That's going to be the next test for the QQQ. This resistance has held price here for about 4 to 5 trading days and is since now starting to break. If this continues up and closes above these wicks, next stop is going to be right here at the 50% area of the parallel, $640. That also would be a new all-time high, as we would pierce this previous pivot high. Next up, guys, this is a rocket ship. Look at SMH. SMH pushing up, now getting above this inclining parallel channel. Truly an incredible move on SMH, considering we were down here on November 21st at $314. We're now 60 points higher, all the way up on the other side of this parallel channel. So rapidly of a move, of an ascension on the chart here of SMH. Incredible move. So again, back on the spiders, same thing applies here. This is one day closing above. Can we follow it up with a backup move tomorrow? Then we'll start planning potential targets for a move in the very near term. Otherwise, this big bull flag pattern that did get gyrated around still could be tagged up here at $412.94. Need to get a confirming move up here on the SMH first. Really interesting push to let investors at least anticipate potential more upside in the near term. All right, next up, the IWM. The IWM does benefit with caps and interest rates lowered. So you can see we got a nice surge on the IWM, pushing up and finishing at new all-time highs. It was all-time highs also on the SMH. Look at that, guys. Another all-time high. Incredible. All-time high SMH, all-time high IWM. And next, that tells us the next move, if this momentum continues, because we have a nice bull flag pattern. This was immature, only 3 days of consolidation. But this surge up tells me that we could still be pushing higher. Next resistance, just over $260 on the IWM if we get there by the end of this week. Next up, Bitcoin. As I said, Bitcoin really kind of struggled today, but this story is still the same as it has been for the past couple of weeks. This 50% area, the parallel, is the line in the sand for Bitcoin. And please remember, I did mention this too. Last time we came to this 50% area, look how long we hovered around this range. We were up and down all around it for about a couple months. We've only been here nearly almost 1 month. Okay, so we could still remain here for about another half a month, upwards of a month before Bitcoin decides to break up or down on the chart. So nothing new to report as far as insight is upside or downside probabilities. It's still hanging out right here at the 50% area of the parallel. Next up, gold continues putting in bullish consolidation, folks. Great move here on gold for not breaking down any further. That does tell me price action's got a good chance to go up, retest the all-time highs right up here at $4,380, which corresponds right here at the top end of this parallel channel. Next up, silver, guys, continued to surge today. And it does also point out the fact that look where this top end of the candle is today with the wick. The high today was $61.94.5. And you can see the trend line right here, $61.97. So we go back into time to remind anybody that may have forgotten, or for new viewers, this trend line comes from all the way back in 1980. And I know sometimes I get this from viewers. They may ask and say, Drew, what does a trend line have to do with now and current times? Do your TA. Understand, draw these trend lines. We're still, even though we may not be the same people trading these charts that were trading these charts back in the 80s, guys, it's all human psychology and human emotions. When you see these patterns develop, they can last and go on upwards of multiple decades. Just like this trend line is showing, I anticipate resistance to be stiff right here in this area for the silver chart, and we should be seeing some resistance in the near term. And if this trend line wasn't enough, look at this weekly RSI down here at the bottom of the chart. It's at 84.35, literally off the charts right there, with 70 being overbought in the near term. So we should be seeing some sort of drawback on silver after this momentum and euphoria simmers out just a little bit. All right, next up, we've got U.S. oil. U.S. oil had a nice push, still remaining in this big red candle that we've been highlighting for the past couple of weeks. Great move nonetheless for oil, but notice what I'm seeing here on the charts. Remember when I highlighted these 3 wicks, then we highlighted these 3, which ended up being 4 wicks. And now we're starting to develop something kind of similar here. Only 2 wicks on the charts right now. We'll be watching this for tomorrow and the following day. This could imply that we could see a little short-term upside in the chart of U.S. oil. Next up, nat gas. Nat gas halted some of its selling pressure today. You can see here, it developed a nice wick on the daily candle, and it didn't tag support that I was anticipating. What it did is catch support at the bottom end of price action over here from the price at the beginning of November, and it's since bounced right back up. It looks like investors with the steep sale didn't want to wait for the solid support to get in down here at $4.23. Instead, they jumped in at $4.27, pushed the price up on nat gas to $4.43. I still anticipate potential sideways movement, even maybe a little bit of a dip in the coming days to tag this level of support. That would make me feel more secure that nat gas could start then moving back up on the charts. Whenever levels get very close to being hit and then get a small bounce, their next approach likely will plunge through the level. So if you're a bull, you would have rather seen price come straight into that level, buy it. That way that level's done, and then price can move up higher rather than teasing it like what happened today. Next up, 10-year yield. We'll briefly cover this. As you see, we did push above this declining trend line, but the selling on the 10-year yield and the price action coming down actually amplified with the FOMC. So this was implying too, these rates are likely going to be capped or coming down. Short term really qualifies for 2 and 3 year notes. However, with the 10-year yield, it will still roll out and should have lower rates. Been a little bit awkward with the rates pushing up as much as they have been recently, but that should be capped, especially when we're talking about some QE coming into the marketplace. Next up, DXY, just real quick to highlight the selling pressure here on the US dollar today. It did drop down. That's one of the components that does really fluctuate when the FOMC makes announcements. And it makes sense. If we're printing money, if the Fed is basically buying these security notes come this Friday, that's creating money out of thin air, the dollar should be coming down in value, which then in turn does lift up silver, it lifts up gold, and it should lift up Bitcoin. But as we saw, that didn't happen today with Bitcoin. It did with silver as well as in gold. But the DXY, as far as Bitcoin, that could highlight too that this just really sticky on the chart of Bitcoin where price action currently is. Next up, the Dow Jones Transports. I just wanted to revisit this today because we did touch on it yesterday. I highlighted we had a daily topping tail that is getting blown through today. I anticipated the Dow Jones Transports to potentially come to this trend line and then bounce up and move higher, but the Fed juiced everything and really kind of turned everything on a dime that you see happening right here on this chart. This chart was showing we should be coming down near term, but the Fed went ahead, injected that cash, pushing the transports up on the charts, finishing 2.66%. That leaves this monthly topping tail target, 18,246 points, as the next target to be hit in the near term. GEV is the next chart we'll take a look at. And man, look at this surge up 15.62% today on the chart. They had a trifecta of good news. They had a double dividend offer. They had expanded shares or expanded and increased share repurchases. And then they also provided a stronger outlook in the mid-teens through 2028. So investors obviously like that, push this price up, not only to new all-time highs, but then getting back into the top end of this 50% area of the parallel. So this area on the parallel will be near-term support, and we haven't pushed up and confirmed above, but I still anticipate any sort of near-term selling should garner support right here around $700. We'll see if momentum builds in that area or if that level cracks and comes right back down. Because if you look at the chart of GEV, it's nearly been straight up for this entire year. Just mammoth moves occurring on GEV. But for a bull stance, at least this was all consolidation for the past 6 months, 5 months or so, building momentum for a potential breakout that's like what we've seen today. Still need confirmation tomorrow. We'll see if GEV accomplishes that task. Next up, GM pushing up 4.72% today. Incredible push for this car making company. This was back on analyst upgrades for Morgan Stanley, moving price targets from $78 up to $95, and also relaxed U.S. emissions regulations. That does encourage investors to want to push this price up a little bit more. But also, just like GEV, GM has been on a tear recently. You can see here from October 22nd, now pushing up 29% on the chart. So if I scroll back in time, and you can see this on the weekly time frame, we have just beaten this inclining trend line, and we've done so in a very vertical fashion. Whenever stocks do things like this, we can hang out for a while, but then they end up reversing. So be careful if you're an investor here. Where can GM go after this? Well, let's take a look. If we connect this pivot high to this pivot, then you're going to be looking somewhere in the realm of about $86 up here on the charts, right off the top end of that range, right around $86 should be the next resistance. If that takes a while, that could get up there closer towards that $90 psychological level. As you see, that's up here on the charts. But first things first, we need to confirm above this trend line. That has not happened yet. We'll see if that occurs later this week, potentially kicking the can into next week for analyzing that upside target there for GM. Next up on Chewy, you can see here Chewy had earnings released this morning. They had a nice double beat, pushing the price of the stock up very nicely up here. And then it got a rug pull. Look at that. It reduced and lost all of its gains, coming all the way back and filling the gap prior to its earnings. I was really anticipating the stock to at least get up to this declining trend line, because you see we've got a convergence of resistance. And in addition to that, you can see from this pivot high here, I have another trend line, what I like to call a hidden trend line, when I connect a pivot to other pivots through the chart. And notice how that connects perfectly to this pivot, and I string that on down through current price. That gives me an X marks the spot. That should be a very hard resistance level on the chart of Chewy. Should have been today at 38 bucks, just didn't get there. Investors were happy to take profit, drop it right back down on the chart. So where does that take Chewy in the near term? That tells me still these declining trend lines are the lines to beat. Even though we haven't tagged them and we retreated, that still will be the upside resistance that I would be paying attention to if I were in Chewy as a long play. Interesting movement, though, on that chart today. Next up, one of the big losers in the mega caps today was Netflix. And you see Netflix the last 2 days, it stuttered right here on the 50% area. The parallel today ended up plunging through the parallel, dropping 4.14%. And then you notice too, the next support under 90 bucks. So it's about $4.50 away at $88.04, followed by 82.11. What happens when these trend lines like to get broken, folks? They like to come back and retest that trend line. First spot, I would be interested to pick up Netflix for a potential rebound play up to that 50% area. The parallel is at $88.04. We'll see if that gets tagged in the next couple of days. Also notice too, on the RSI and the daily, we are oversold near term at 26.17. So Netflix is due for a near-term bounce, at least for the near term. And lastly, we got AVGO. Now, Oracle reported today. Lawton did a heck of a job covering it. He's also going to report AVGO tomorrow. Matter of fact, we're going to do a joint show again tomorrow as AVGO releases earnings slightly after 4 o'clock. So please tune in, be ready for that. We should have a lot of great trading action you can do live with Lawton. And then we get a great market summary recap with trading the close afterwards. So first up, looking at AVGO, look at this. We're right here at the top end of this inclining parallel channel. This is on the daily time frame. We haven't quite touched the top end. The top end for tomorrow is going to be $416.89. Should we have a great earnings beat on AVGO? You better believe there could be a gap and go situation here on AVGO. But any sort of selling coming into the market, like what Oracle has done, first support $391.80, followed by $380.34. And then this would be more of a longer term distance. I don't think it's going to get there after earnings, but this area 361.80 needs to be considered. If you're wanting to get into AVGO, look at all this consolidation that occurs back on the charts, where we should see a good amount of support, especially if price comes rapidly right down into that range. All right, guys, what a day today. Man, the FOMC, that stuff is really exciting. Thank you so much for tuning in today and getting your recap on it. We're going to have more details as they unfold tomorrow. So please tune in. Can't wait for that show. Don't forget to like and subscribe to this video as well as our channel. Don't forget to send this out to your friends and family so they too can keep in tune with technical analysis and what's going on in the markets. All right, guys, until then, I'll see you on the charts. You guys have a fantastic day.